Farmers today are facing rising costs, volatile markets, and extreme weather. The Better Way to Farm podcast digs into strategies to help you take control of farm inputs and maximize profit so your farm can thrive for generations. Remember to take advantage of our free resources at abetterwaytofarm.com. Now, from America's Heartland, here's your host.
Have you figured out yet that we have a little situation in that it takes more corn today than it has ever taken in the history of the world to purchase 1 ton of 1846O? Hey guys, Rod here at A Better Way to Farm, where we increase yields and improve profits. And we're really, really lucky today because we've got someone on here who I'm considering an expert, and I am super excited to listen to and to learn from. This individual is going to talk about this price of fertilizer and maybe some steps that we can take to help ourselves here. He grew up on a farm in northwest Missouri. It was a family farm operation growing tobacco crops and cattle. He brings a very unique perspective to the fertilizer market. With over 20 years of experience in this industry, he has operated in roles that have given him market perspectives as a North American logistics specialist, as a U.S.-based nitrogen producer, and general manager of commerce in Melbourne, Australia. He and his team, which span the globe, have worked hard to educate the market on how to use the fertilizer future markets to not only offset the price risk, but also to be able to sell produce to farmers much sooner. Please help me welcome Mr. Josh Linville. Josh, thank you for taking time today.
Hey, man, happy to be here. Thanks for having me on.
So, Josh, before we launch off into that, let's just dig into your background just a little bit more. People always like to know who they're listening to. How did you become an expert in the futures market of fertilizer?
Well, honestly, if I'm being completely honest, I had zero intention of being in agriculture back in college. Went to the University of Missouri. I had every intention I was going to do the Wall Street thing, investment banking, all the cool things you'd see in the movies. And senior year, I actually started talking to the company called DeBruce, and they offered me a job. I was like, that looks decent. My now wife and I were both looking to get back to the Kansas City area, and it kind of checked all the boxes. Like, oh, let's just do this for a little bit. So I started in fertilizer literally the day after I graduated from college, and I've never gone anywhere. You kind of get sucked into a career once you get started down that path. And, you know, as the years have ticked by, and the thing that just scares the crap out of me is I go to these conferences now. It used to be, oh, look at these old guys that are around. Well, I'm going to these conferences now, and I look around, and I'm like, well, where are the old guys? Well, gosh dang it, it's me. I've been in this industry now for 23 years. And honestly, there's no place I'd rather be. And I know growing up and even my early years in the industry, you know, my dad and family always talked about, you know, fertilizer is one of the biggest cost inputs per acre. And we don't know a thing about that. And I have a problem with that. A lot of fertilizer information, it's controlled because information is power and power is money. And I'm not okay with it. This is something we got to start breaking loose. We got to start getting more information to the buyer. Does it change the way the market reacts or moves or anything like that? No, but if we know what's going on and we know what to watch for, we can get ahead of these moves. To your point, the market isn't exactly giving us a lot of chance to make money. It's not giving us a lot of opportunities, but there are opportunities out there if we know where to look.
Absolutely. And I think that's what we've tried to do here, Josh, is to work off of an educational, informational side of things. The sales side, there's plenty of people out here selling and pushing and trying to figure out how to take everybody's money. But from our standpoint, we agree with you that this is our business. This is the farmer's business. And any businessman has got to know how to run that thing. And he's got to know every component and what that input is bringing and how to best manage it. So I appreciate what you guys are doing with that. So Josh, talk to us. Let's dive in here. We're in uncharted waters. What do you see at today's price? It takes how many bushel of corn to buy a ton of DAP?
Well, so when I look at it, and again, I use NOLA, New Orleans, Louisiana DAP barge pricing, and I use Chicago corn pricing. And the reason for that is the biggest, most liquid, easiest to view markets out there where I can talk to a wide audience. So I want to make sure everybody knows the numbers I'm talking is not going to be the same as what you're seeing locally. Your local numbers are what truly matter, but because, again, I'm looking for the general patterns, the 50,000 foot level, that's where I have to come from. 2008, at the absolute peak of it, and this was the point when corn was starting to fall off the face of the earth and phosphate prices were still quadruple digits. It was taking about 183.43 bushels of corn to pay for a single ton of DAP. That was the highest ratio we had ever seen by far, and we've never come close to challenging it until now. The weekly averages still aren't quite there. It's still a couple bushels off from that. But we have seen some spot instances where a DAP barge is traded a little bit higher and there's been some dips in the corn market. We have seen that ratio jump up to about 185 and a half bushels. We have set on a spot basis the worst ratio, the worst value that farmers have ever seen in terms of their phosphate corn relationship.
Wow. 185 bushel to buy 1 ton. That's a lot of grain for that 1 ton of fertilizer.
Yes. And the really sad part of it is, of course, we're making a lot of comparisons to 2008. And every person listening who was a farmer back in 2008 is going to remember corn prices were not what they were in 2008 as far as what they are today. They were significantly higher. There was a lot of opportunity for the farmer to lock in a significantly higher price. So, yeah, the relationship was, nearly levels what we are today. But because the price of corn was so much higher, the income was so much bigger, it was more easy to offset that high price relationship. Today, I mean, man, we were just talking. There hasn't been an opportunity this year where you can look back at the corn price and say, oh, if I just sold it all at this high value, I would have been okay. Yeah. I've not seen a high value yet. It's just been a matter of, is it bad or is it really bad?
Well, and the bottom line from where I sat is I don't see anything on the horizon that's going to make it better, barring some kind of absolute disaster weather-wise. And it's going to happen fast because we're at a point right now where the corn crop, to a large degree, we could get hot, we could get dry, and we could take 10 bushel off. But, we're here. I've driven across all of Illinois, most of Indiana, a chunk of Iowa, a bunch of Missouri in the last 10 days. And yes, and I feel for the people who had too much rain earlier, the people who maybe are in a small pocket of drought, but overall, it's good. I'm afraid that it's good. Now, the question is, how much of that lack of pollination are they going to find? And I don't know the answer to that. But as far as looking at it, it looks good from the road.
Yeah, and that's the thing. You saw the WASDE report come out yesterday. I think that corn yield number they came out with was 188.8. And very quickly in the office, the first statement that was made is, listen, that crop is not in the bins. That is just the expectation for this point in time right now. Things can certainly change, to your point. But yeah, we like to talk about, it's too much rain. Well, yeah, that creates some pockets here and there, but it's really good for the general area. And there's other things out there. So yeah, I think it's going to be a big crop. Unfortunately, to your point, it's almost like the market is wishing there was another derecho event, or maybe we can come up with a new version of ethanol that booms corn demand, because otherwise we are sitting on a lot of bushels of corn looking for somewhere to go. And that's never bullish. That's rarely bullish, I guess I should say.
Yeah, correct. I spent the last 2 days, one day preparing for a meeting and yesterday hosting a meeting with about 70 of our top people on our team. And so my days were starting at 5:30 in the morning, and I got to bed last night about 12:30. So I did not look at that. But someone said, did they miraculously find another 2 million acres? Did I also read that?
Yeah, it wasn't enough to move the yield up. It also increased the acres as well. So trust me, I'm not a grain market guy, expert by any means. I kind of repeat what I hear smart people say. I'm really good at that. But yeah, yesterday was a 1-2 punch. I think people probably expected one or the other, but to see both be increased like they were, I think was a shock. I actually threw out a tweet yesterday and said, there's days in your career that you will always remember when you retire. And I think yesterday, or in the tweet's case, today is going to be one of those days.
Yeah, I totally agree with you. We own some farm ground here in southeast Iowa. I just wish I could just find another 300 acres, let alone 2 million. That'd be so cool.
Yeah, wouldn't that be nice? The problem is, at this point, you're probably losing money for every extra acre you have, or making money.
Yeah, there you go. Yeah, there you go. So, Josh, talk to us. We're in this situation. Now what? What are you suggesting people who are listening to you do about this?
Well, number one, the first thing I think a person needs to do is understand the why behind it. Because it's very easy to sit there and say, all this is domestically driven. This is a U.S. situation. Because we always look at our backyard. We're all guilty of it to one extent or another. And that's not completely right. There are things that we have done from a U.S. North America perspective that has caused a little bit of a higher issue, but it's more of a global issue. When you look at phosphate around the world, 5 countries control, I'd say 85 to 90% of the production and the export of phosphate. It's a relatively small number of country market. China would normally lead that pack with about 8 to 10 million tons exported per year. but the government has restricted that. I think part of it has to do with higher agronomical demand as they ask their farmers to produce more food instead of relying on imports. I think part of it is industrial demand being raised because you look at battery tech, it's very into the middle of phosphate, and guess who's a major battery manufacturer? China. And so both of these have made it where here in 2025, the government has basically put a export limit at only 4.5 million ton. That is a significant amount of supply that's missing from the world. Now, our own, tariffs and duties and everything else that we've done from a trade situation with the world has not helped. But when I look at the price of phosphate today, that only accounts for $100 a ton, give or take, of a Gulf price that's around $800 a ton. So if we all of a sudden fixed all the free trade and no tariffs and no duties, I still think it's a situation we only see the price down 75 to $100 a ton. The rest of the world is still needing to buy a lot as well. So understanding the what and the why behind it is major. The next is our own steps. And I think that's where it starts coming down to rational decisions. And I think you're going to start seeing situations where soil sampling is going to take a much bigger step, a much more important step for a lot of operations. I only want to apply it where I need to apply it. I think you're going to start seeing some of the other products that people have kind of pushed aside and said, no, I'm not going to go down that road. I think they're going to start looking at that sort of technology and new products to give it a shot at these kind of values. My fear is you're going to start to see a lot of emotional decisions be made on the farm gate. And that's, to me, the most dangerous thing we can possibly do. I mean, if I get my wife to come down here right now and talk, she can share with you every angry, frustrated decision I've ever made, and she'll happily tell you why it was the dumbest decision I could have made. They never work out. I mean, unfortunately, we can be angry and frustrated and depressed and sad and all this stuff about the market, but at the end of the day, farmers are CEOs of their operation, and they have to approach it like that. There has to be a cold and calculated marketing decision each and every time.
Absolutely. And it's really hard because farming is an emotional business. We do this with this idea we're going to leave it to our children. We're going to leave more than what was left to us. We're going to leave it in better shape than it was left to us, and we're going to do a better job. And that's the emotional side that I think nearly every person wants. And there's nothing wrong with that. However, when it comes to making those dollars and cents decisions, I just yesterday, I had a guy walk up and he said, "Where'd you go to college?" And I said, "Culver Stockton College in Canton, Missouri." And he said, "So did you get an agronomy degree?" And I said, "No, I have a degree in business administration and economics," because from my standpoint, I'm self-taught on the agronomy. I've got boxes and boxes and books and shelves of books that we have read and studied. And I think that a lot of us in agriculture need to go back into those books and really look back at the agronomy and stop thinking that it's all in PK. And as you said, embrace the idea that micronutrients might be the most important thing that we're lacking. And we can spend a lot less on P and K and just a little bit more on zinc, manganese, copper, boron, and those types of things, and really watch our yields go up. And I think something different may be an alternative path, as you said. Is that kind of where you're at too?
Yeah, absolutely. It's one of those things we can't follow the herd in this type of situation too, right? I mean, this is going to come down to every state, every county, every field, every farmer. Everything is going to be different, which is why it's so important to know your operation better than everybody else. Everybody else might be sitting there saying, "Oh, I'm just going to go PK. I'm perfectly fine." But you might run the numbers and figure out, oh, wait a minute. To your point, one of these micros is actually my limiting factor. Maybe nobody else has that issue. Maybe everybody has that issue and they don't know. But because I have figured this out, because I'm more worried about my own operation than everybody else out there, I need to get on top of this. And that might give you the leg up. I mean, one of the things we talked about yesterday was, back in the 80s, it was a horrible, horrible time. And I'm not saying we're there today, but the people that grew in the 80s towards the tail end of that are the major, major people today. These are tough times today, but those people back in the 80s kind of thought outside the box. That's what we've got to be doing today. We've got to embrace that change.
We absolutely do. I think from my standpoint, and one thing I figured out a long time ago, Josh, we don't have to agree on everything to be friends. As a matter of fact, we shouldn't, because that means we're basically worthless to each other if we do. But the thing that happened there was I bought some ground after the crash in the 80s. And of course, I wanted to buy more and just flat couldn't, to be quite honest. Mm-hmm. And I wish, it would have been good. If we get some kind of big correction, I don't think it's any secret that the guys that have the, cash is going to be king. And the guys who can have some could be in a position to really, really do some significant things.
Yes.
So that's kind of what we're looking for and pushing towards, is to have those guys there. So Josh, as you go about your business here, are you actually having some guys use the futures market in order to protect themselves in regards to these fertilizer purchases?
It's coming up in conversation more. One of the issues with the fertilizer futures market is, again, it's based in the Gulf. And because of that, that's where all the barge trade is. So most of the trades that happen are in 1,500-ton blocks. Now, we're seeing smaller blocks here and there, but 1,500 is still the gold standard, because 1,500-ton barge, hedge 1,500-ton. And for a lot of farmers out there, that's just far too much for their operation. Fortunately, the CME just did a soft rollout on NOLA urea, and they've changed that contract size down to 10 ton. It's its own separate market. And we've already seen a little bit of trade in that. I'm not going to act like it's anything like corn or beans or anything like that. But the simple fact there's not really been any work in the space and it's already starting to go is exciting to me. And that's always been my thing on it. Again, why are we limiting these markets to just the major players out there? Why don't we allow the farmers where it truly needs to end up? Why don't we get it down to something they can participate in? And then that helps everybody in the entire market.
So what you're saying is, what we would actually do is we would take the futures market and actually be utilized for the people that it's supposed to be for, and not be utilized by Wall Street and day traders. Is that your novel idea?
Yeah, it's crazy, isn't it? I mean, just completely unique new thinking out there.
Those who follow us, Josh, know that I have a very distinct opinion about the board of trade and the idea of trading one bushel of grain 10, 12, 15, 25, however many times it's being traded. But that's a comment for another day. But there is a thing, and there is a place for it. If the guys can utilize it in a way that they use it as an insurance policy to, let me go off script a minute here, Josh. Let me say this. If I had a big feedlot full of cattle, I would definitely have those contracted or hedged in some capacity, because there is a correction coming in that cattle market. And I lived through the correction back in about 74, and I watched what that did to the cattle feeders. And I think it would be wise to lock them in at $2.30 a pound to avoid selling them for 80 cents. So there's a place. There's a place.
Well, on the fertilizer side, I'm sure a lot of the audience understands as much as you do. Can't always get the physical product locked up when you want. And there's always a lot of anger and angst when that happens, because they're looking at and talking to the retailer and saying, why can't you give me this? Why, this and that. Well, it's not for a lack of their willingness. It's a lack of opportunity in the market. And again, because it's a more controlled market, take anhydrous, for example. You can go and you can get fall numbers right now for anhydrous. You are not going to find spring numbers for anhydrous, because the manufacturers have not rolled out those programs. And they probably won't until the second half of December. But when you look at these markets where they can trade out 6, 8, 10, 12 months out into the future, well, if you see an opportunity where it's like, hey, that price is really, really good. If I go talk to my local supplier and they say, I'm sorry, I can't offer you anything for the physical market right now, come back at a better time. Well, I can now go out there and say, but you know what? I like the price. It makes sense. I can sell some of this grain. I like the ratio between them. And I can buy that futures, and that can hold the place for my position until that physical market finally comes back around.
Yeah, and you've triggered two thoughts in me here, Josh. Number one, you're using that NOLA market, which is, I understand you're consistent, but the numbers that I'm hearing throughout here in the Midwest, most people are coming in $900 a ton and up. If they can get a price on DAP, it's 900 plus. And that came out of Indiana. It's been out of Kansas. It's been reported to me out of the Dakotas. And so that kind of seems to be the standard in there. That really concerns me. I see some real plus there. The other thing is, if you'll remember in 08, that mess, when that deal came down, I had a friend who literally had written a check for 28%. It was paid for. And then they sent it to him in the spring because he didn't have the storage for it to take it in the fall. And then they sent him a bill and wrote force majeure on the bottom of it. And he had to pay that. That went to court and he lost. And even though he had prepaid for that fertilizer, if you don't have it on your farm, you really don't have a guarantee. And so locking this in, this is one time where I'm not going to rail against the idea of the futures market, because that is your insurance. And if it takes off and runs up like a rocket ship, now you can sell it, take the money you made there and use that to buy down the price of your 28 or your urea or whatever it is. That makes sense to me.
Yeah. And so in your inland markets, to your point, phosphate's over $900. A barge, the last time we saw trade in the Gulf was just a little bit over $800. And you're like, that's a massive spread. But when you start to think about the barge freight it takes to get up the river, it's double digits. When you think about going through the terminal to get it off the barge, it's double digits. When you start to think about the truck or the rail freight, there is a lot of cost involved. And that's what a lot of people get tripped up on is they're like, oh, I see NOLA, it's significantly cheaper. That's where my price should be. It is not cheap to move product from point A to point B, but that is the same as when we talk, let's say we're talking about Chicago corn. Well, why is my elevator price different? Well, there's costs involved, and that's your basis between Chicago and your local elevator. It's the same thing with fertilizer, except instead of Chicago, we use NOLA.
Yep. I got to be honest. I'm surprised it's not more than that. That's about 12.5%, right? Going from 800 to 900. I'm really startled that it's not a bigger spread than that, to be quite honest with you. And here's what I know: get you a semi and head for New Orleans and start trucking it home. But I know what you're gonna. No, but seriously,
Yeah,
I know what you're gonna have in it when you get it back here.
Yep.
And it's going to be well over $900 a ton.
Exactly. And that's one of the things, and I'll advocate for the retailer a little bit. A lot of people sit there, again, because they're the one we talk to, right? As we're farmers, and I look at it from a farmer point of view, the retailer is the person I'm talking to. So when I've got gripes, who am I going to go talk to? It's the retailer. But when I'm talking to them, I mean, their margin structure, it does not change. If the product was $300 or $900, it doesn't really change. For some reason, that market just doesn't go with it. And when the price is higher, well, number one, the farmer's yelling at them, and that gets old because it's not just on the work calls. You see him at church, you see him at the grocery store, you see him at basketball and football games. It's constant. And then you start to talk about the insurance rates and everything like that. And it's kind of a weird situation, but to your point, it's by all rights, it should be higher than what it is today because the market is kind of showing that. But thank goodness it isn't, because it's already an astronomical number. I mean, to put more pain onto the situation, it would just be unbearable.
But my concern is, based on the people who I trust in this, I'm very worried about what the fourth quarter looks like. I am deeply concerned that the pain is going to become worse instead of better. I'm very fortunate, Josh. Our company, as of right now, we've announced our program for the coming year, and we did not raise the prices one dime. But I literally am praying that we can hang on to that and not have to here as we end up quarter three and head into quarter four. That is a concern of mine that is very deep.
Well, that's a phenomenal thing, because you look at it and every farmer out there will say every single input is sitting there saying, I really liked last year's piece of the pie. This year, I want a bigger piece of the pie. And they have no idea that pie has shrunk. The farmer economics and everything has gotten so significantly worse than what it was even 12 years ago or 12 months ago. And it was not good 12 months ago. It sure feels like a reckoning is coming. So yeah, to not see the price go up, that's impressive.
One of my speakers yesterday threw up a picture of Einstein with his quote of, the definition of insanity is to do the exact same thing and hope for a different outcome. And one of my podcasts I opened with, Josh, it was like, what's it going to take to make you take a look at something different? And I think that's where we're at. Would you agree we're standing on the edge of saying, maybe it's time that I do stop doing it the same way we've done it for 40 years here and look at an alternative that might make us a little more money?
Yeah. At the end of the day, it's pressure creates change, right? And right now, I mean, you can look at this market and you go back to that DAP corn ratio chart, and it shows the highest we've ever seen. At least from that perspective, we've never seen this kind of pressure before. When you start going across all the major fertilizers, you've never seen this pressure. Seed, equipment, land price. The farmer is dealing with pressure like they've never seen in their lifetime. And maybe the farmers back in the 80s can sit there and compare it to something, anything close to it. But yeah, pressure breeds change. And that is probably something we're going to start seeing here over the next 3, 6, 9, 12 months.
Exactly. And my encouragement to the guys is change before you're forced to. I talk to the guys about cutting back on their nitrogen use. And, there's a lot of guys still using 1.2 pounds of nitrogen to get a bushel. Some guys are saying 1.5. And, my deal is, let's figure out how to get that to 0.6 or 0.7, because if the government was to come in and regulate that and say you can't do that anymore, if you already know how to do it on a 40%, like reduce it by 40%, then you're just in front of the game. So change is always better when it comes about because it's your choice, not because somebody made you do it, right?
Absolutely. And that's the thing. That kind of thought process is what gets you ahead of the competition. And that's what it really comes down to. You don't need to be light years ahead of everybody around you. I think I remember reading about a study one time. They looked at the top farmers and the lower end farmers. The percent difference between the two groups was not massive. You would think it's like, oh, the top end's doing like 50% better. It was like 5 or 10% at absolute most. And it's those little steps, it's those little wins, it's those little opportunities. Like, okay, I'm going to jump on this because it's there, and I'll do for a layer, or I'll just get a little bit ahead of this and try and lead the charge on it. There'll be some you look back and say, boy, I wish I hadn't done that. But if you don't try it, you'll miss on every single one of them.
That's correct. And I think the thing that we see is that consistency compounds. And so if I'm only 5% better than my neighbor, but I'm 5% better every single year, pretty soon that starts to show up on the balance sheet in a very massive way.
Yeah. Well, Kobe Bryant talked about that, right? People talk about the fact he was in the gym by 3 or 4 o'clock in the morning and got in like one more workout or one more hour. And he talked about it. He said, listen, I am not superior to everybody out there, but I will outwork you. I will do the little things that put me so far ahead of you within a 2, 5, 10 years time frame. Farmers got to do the same thing. Little percentages compounded over many, many years creates a very, very big separation.
My wife and I were talking yesterday about the old quote. I think it's a Chinese proverb, but it says that in the battle between the water and the rock, the water always wins. And that's because it just never quits coming. Eventually the water will wear the rock out. And that's what we've got to be as the water. We got to be global. We got to be changeable. We cannot be like the rock and just stand there and go, we're going to survive this, because sooner or later the water is going to get us. If they want to get in touch with you, Josh, how would they go about that?
I do a lot of stuff on Twitter. My handle there is at JLinvilleFert. I put a lot of stuff out there trying to do stuff daily, whether it's, insightful fertilizer information or just some stupid meme, because I couldn't come up with anything smart to say. And you can always go to stonex.com, find us there. A lot of information, a lot of different tools there to go be found. But those are probably the 2 best places.
Sounds like a plan. Josh, it was a true pleasure to get a chance to visit with you. I look forward. I'll be in Kansas City here. You going to be around next week?
Next week, so I actually have to drive to Nebraska to give a presentation Tuesday. And then Wednesday, we are moving our oldest into the dorms at college for his first year away. So we're moving the first one out the door.
Oh, that's exciting. Congratulations. So sometime when I'm down there, we're going to go get dinner, all right?
I am absolutely down for it. You let me know.
All right. You have a great day, Josh.
Thank you, sir.
So those of you guys who are listening to us, I hope you found great value in this. I so appreciate Josh and what he brings. And I think going to stonex.com would be a grand idea. I think it's time, folks, that we do take a look about maybe some alternatives and say, what can we do? We thank you guys for giving us a part of your day, because we know you're really busy and we value the chance to be a small part of your life. To all of you who are listening, we really do hope you're having a better day.